Well, we have seen store closures, especially in February in China. So over the total course of the month, on average, 60% of our point of sales were closed. But as you already alluded to, we have seen an even steeper decline in traffic. So for the total month of February, we've seen in China almost an 80% drop of traffic to our stores. Now, in the course of March, we see now a start to recovery. Only less than 20% of our stores are still closed. The others have returned to more or less regular opening times. But still, also in China, we see a significant decrease in traffic compared to the last year. Outside of China, yes, there are certain areas, especially in Asia, Korea, Japan to mention, where we see the impact of the missing Chinese tourism. And to some degree, this is also affecting our business in Europe and North America.
So Mark, when it comes to the guidance, you say you expect a gradual normalization by middle of the year. We're just wondering what you know that we don't know, because what we've had clearly across the globe has been an infection rate that is spreading in individual markets, Italy closing its schools and universities. Why do you have any expectation that by the middle of the year it will be business as usual?
You're absolutely right. We have to monitor the situation, and it's evolving as we see now in Europe, where some countries are already more severely affected than others. However, we need to base our sales and also our buying plans on the merchandising side on some expectation how long this crisis will last. I mean, there have been comparable cases with the SARS crisis in the past. So our current financial planning is based on the assumption that we see consecutive improvement in the course of the year, and we expect a normalization in terms of traffic operations as of the start of the second half of the year. This might be proven wrong, but I think that's kind of like a coherent theme in the industry that we should expect latest after the summer a return to normalized operations.
Mark, can I ask you about the e-commerce business, online sales, particularly perhaps in Asia? There was a lot of focus, I think, on Hugo Boss to shift the channels to market, and you've invested a lot in online. If you look at current sales, is online holding up?
It is, and this is a global phenomenon. I think also in Europe and North America, people are a bit more reluctant to pay a visit to shopping malls just to limit their exposure. So we have seen over the last couple of weeks an uplift in our trading, both on our concession partner platform, on our own platform. And it confirms our view that the integration of online platforms, either via the expansion of our own global platform, which we will aggressively pursue in 2020, but also the collaboration with important platforms like Alibaba in China, is also a route to reach these customers also in time where maybe the visit to physical stores is more restricted, like we see currently with the corona outbreak.
Mark, I think you come under the bracket of affordable luxury. So I've just gone on to the doyen of middle-class Britain, johnlewis.com, and I noticed a lot of Hugo Boss products on there as well. And I'm struck by actually the affordability of the Hugo Boss products compared to what I've always thought of as Hugo Boss being very expensive. Are you cutting your price point, and i.e. cutting your margins?
Actually, we're not. What has happened over the last 2 years is one thing that we have brought our European price level basically to a very narrow range between the pound and the euro. Because now, in the times of the internet, you may already mention that, consumers are very aware that we have to operate in a relatively small pricing range. But you're absolutely right. We offer an outstanding value for money at the price point that we operate. But actually with the expansion with tailor-made suits, made to measure, actually we have seen an increase in the average value of our transaction. There's one trend in the industry that is also relevant for us. I'm wearing a sharp suit today, but clearly in the also professional environment, people are dressing down, they're wearing more smart casual. So there's a stronger growth, and also for us in the casual wear segment of our business, outerwear, leisure jeans and t-shirts. And in the segment that we also with our partners with John Lewis, we are pursuing quite aggressively. So there's no change to our price positioning, but there's a shift in the market to more leisure categories, which on average is slightly lower price points because you sell a t-shirt clearly on a lower price point than a suit from Hugo Boss.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.